Will United Airlines stock, ticker symbol UAL, continue to soar higher? Because very recently, the stock hit a new high of $60.23. And so we will answer this question because on the last trading day, we detected an unusual trade worth $1 million. And so in this video, we will analyze this unusual option activity to find out how this wealthy investor is now trading United Airlines stock. Are they bullish in buying or bearish in selling? So that we can also make the same financial decision to make money while the rich are getting richer on Wall Street. Because as we all know, the rich have more access to information, including leaked insider information, to make better financial decisions. No wonder the rich get richer. Now, if you've been following our channel, you know that we are actually already in a United Airlines trade that has already become very profitable. This was the trade that we shared about 2 weeks ago on a $2.9 million trade that we detected on September 13. And so that was on this day here. And so you can see that ever since we analyzed those unusual options, it continued to move up higher. And you can see that it went up 20% to new highs, breaking out of this previous resistance here. And so that is the power of our analysis of unusual option activity, that we can predict stock price movements because we follow and monitor the trades of wealthy investors who have better financial research. And so if you missed out on our video analysis, you can search the title over here on our channel. We will also put a link at the top here. Make sure to subscribe and hit the bell icon so you don't miss out on these very profitable opportunities. Because in this video, we shared these options that have now gained more than 100% profit. Now, how much exactly did it gain? Well, let's take a deeper look at that trade. You can see here on our risk profile profit loss graph, they were these November 15 options at the 52.5 strike calls. And you can see now United Airlines trading at $57. And so the profit is $383 per trade. This already takes into account the cost of the trade, which is why if the stock had gone down, you can see it would have been a negative $280, the cost of the trade. And so when we calculate the profit percentage of $383 per trade, divide by the cost of 280 times 100 for a percentage, you can see that these call options have already made 136% profit because they are now deep in the money. And you can see why that is so on the option chain here for these November 15 options. We are still in the position, but we started to roll our options to a new position. You can see here at the 52.5 strike call, they are now worth $650 to $665. So we can sell it back to the market for this price when we initially bought them for $280. And that is why these options are so profitable, gaining the leverage, even though the stock only moved 20%. And so if you want more of these trades, because not all of them will be profitable, and that is why we have to diversify our portfolio in order to beat the market in the long term. And so we'll put a link to our website up here if you want to gain access to better trade ideas with a higher probability of profit based on stronger data than this one here. Now, as we mentioned, we started to close out of some of these contracts that we had and rolled it to a new option because of unusual options we detected on the last trading day. And so these were the new options that we detected on September 30th. You can see March 21st, 2025, 70 strike calls, 3,750 contracts were being traded. The price that was being paid, $270. We multiply by 100 because each option represents 100 shares of stock. And so when we calculate the total cost of the trade, 270 times 3,750 contracts, we get a total trade that costs $1 million. So not as high as the previous trade that was $2.9 million. So this lowers the probability of profit in comparison to the previous trade when the stock was trading at just $50 a share. So keep that in mind. This is higher risk. And when we analyze this trade some more, you can see that these are clearly opening trades, because when we look at the September 30th trading day, when these options were being traded for these March 21st options, you can see that at the 70 strike calls, the open interest was only 749. And those options that were being traded at the volume have now added to the open interest. So we can confirm that. You can see here for the March 21st, at the 70 strike calls, open interest is now 4,771. So it is clear now those unusual options were opening trades and not closing trades, which is important to figure out if you do trade based on this type of data analysis. And you can see that we are also in the same position. POS stands for position. Green means buying, where we also bought these 70 strike calls for $270 each. And when we analyze this trade, you can see here that this trade is also a long bullish trade, because as the share price, which is represented on the x-axis, and the profit loss on the y-axis goes up, it becomes more positive profitable. If it goes down from where it currently is trading at, $57, it becomes more negative loss, because this is a long bullish trade. And we can confirm it on the Greeks here. We have a positive delta trade. If it was a short bearish trade, it would be a negative delta. Now, one thing that we did, as we mentioned, is we started to take profits on our previous trade. Because our previous trade had a profit of $383 per trade, we rolled them to these new options that have a cost of $270. But because we rolled from our previous trade with a profit of the $383, which is greater than the cost of this new debit trade of $270. So when we calculate it out, we end up with a credit trade of $113. So we just basically used some of our profits from our previous trade to open this new trade that costs less. And that allows us to lock in profits and eliminate the risk. And so you can see that by factoring in our previous trade and then using it, we now have a trade that locked in $113 of profit per trade. And if it goes down, there is no negative loss. But if it continues to go up, we will be able to make more profits. And that is one of the ways that we manage our trades to make sure the risk to reward is always in our favor. Because now, in this case, there is no risk. We will not lose on this trade anymore. While at the same time, we could continue to gain if the stock continues to go up higher. And so that is something that we do and share with our gold level members, is how we manage our trades to always make sure that we can maximize our profits while reducing our risk. And so if you are interested in more of our strategies, make sure to go to our website where you can learn how we can consistently beat the market by analyzing the trades that the wealthy investors are in and then using option strategies to reduce risk while increasing profits. If you missed out on our previous United Airlines video, make sure to watch that too so you can learn how we were able to make more than 100% so far and locking in profits. Let us know in the comments below what you think will happen to United Airlines stock. Will it continue to soar or will it crash down? As usual, please smash the like button, subscribe if you haven't. Take care and have a wonderful day.